This is Nightly Business Report with Tyler Matheson and Sue Herrera.
No growth. The economy shrank significantly in the first quarter. Is it cause for concern, and what does it mean for the Federal Reserve and interest rates? Curing cancer, the names to watch as some of the biggest drug and biotech companies attempt to change the way the disease is treated. Back in business, an iconic U.S. airline takes flight once again, nearly 25 years after it shut down. All that and more tonight on Nightly Business Report for Friday, May 29th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera is off tonight. Well, it was a triple-digit decline for the blue-chip Dow Index to end the month. More on that in a moment. But we begin tonight with the economy's ugly first quarter. The government reports that the economy shrank by a decent amount during the first 3 months of the year. Gross domestic product, which is the broadest measure of goods and services produced across the country, contracted by a significant 0.7%. Now, as we've been reporting, there are a lot of questions surrounding the accuracy of first quarter GDP data historically. But regardless of whether the economy shrank 0.7% or a little less, or whether it even grew a smidge, the bottom line is this: the economy is weak and investors want to see more growth. Steve Leisman has more now on the first quarter. What's ahead in the second and beyond?
Today's GDP number was ugly, but the street is already moving on. The government reported the U.S. economy contracted by 0.7% in the first quarter. That's revised down from the initial read of 0.2% to the upside. A higher trade deficit and lower inventories played the biggest role in the contraction. On the positive side, the data showed some signs of a pickup in business investment and housing. Consumer spending remained about the same compared to the previous report. Many economists are looking past the first quarter weakness to a bounce back in the second quarter and to overall growth in the economy.
We're roughly a 2.5% economy. You have to look through some of the noise in the GDP data. Let's wait for July to see what the fix is. And you need to complement GDP with what we're seeing in employment, what we're seeing in the unemployment rate, what the ISMs are doing.
The data presents a dilemma for the Fed. It doesn't want to hike rates into a contracting economy, but it also has to take account of strong job growth.
If you put it in the context of we're still creating the fastest jobs at the fastest pace since the late 1990s, and at that point in time, short-term rates were around 6%, it's very hard to justify keeping the policy rate at zero when the economy is still growing 2 to 2.5%.
Because of the confusion over GDP, labor market data becomes even more important next week. Economists expect 220,000 jobs to have been created in May and the unemployment rate to be unchanged at 5.4%, showing still pretty strong growth. For Nightly Business Report, I'm Steve Leisman.
David Kelly joins us now to talk more about what lies ahead for the economy and the markets. He's Chief Global Strategist at J.P. Morgan Funds. David, always great to see you. These numbers on the GDP today, head snapper or head fake?
Head fake, I think. We've, as Steve said in his report, there's a lot of variability in the first quarter numbers. There are a lot of special factors. But the main thing is if you look at some of the other data, look at pending home sales, which are at their strongest level since 2006. Next week, we're going to get light vehicle sales, which looks like about 17 million units at an annualized rate. So there's plenty of signs that the economy is coming back. And I think, yet again, we're sort of being faked out by 1 week quarter when the economy is actually motoring ahead.
So what does this mean in terms of second quarter growth and growth for the for the rest of the year? Where do you have it tracking?
Well, we think that growth is going to bounce back. I'm coming up with about 3% growth for the second quarter. A lot of that's bouncing back from special factors here, and then about 2 to 2.5% growth for the rest of the year. That doesn't sound like a lot, but it's plenty for this economy to cope with. I think it's going to push the unemployment rate down towards 5% by the end of the year. And, really the Federal Reserve needs to get going here. Obviously,
the first quarter GDP number is a backward-looking number. The Fed will think about it, look at it, probably say, done with that. Okay, we get it. They say they're data dependent. What do you think the data is that they'll be watching closest, and when do you think they'll start to move on interest rates? You've been calling for them, as you just did, for them to move sooner rather than later.
Well, this economy is a bit like a game of red light, green light. I mean, every year we get a red light and everybody freaks out, including the Federal Reserve, and they freeze and they don't do anything. And then for the rest of the year, we sort of quietly sneak up on full employment. I think finally this year they're going to realize that they just can't freak out too much about 1 week quarter. So I do think they'll do something by September, a first rate hike. I think they'll see the unemployment rate close to 5% at that stage and wages beginning to pick up. And I think they'll put in one more rate hike in 2015, and then they'll have to really get going in 2016 because they are way away from normal given where this economy is right now.
Let's spin this scenario to where our viewers care most, and that is their portfolios. What are the implications for what you see for stocks and bonds for the rest of this year?
Well, I think it's still positive for equities because I think what's going to happen is as the economy picks up, I think earnings will do a bit better. They've got a lot of headwinds from oil and the dollar, but I think that will gradually ease. And meanwhile, as short-term rates go up, I think it's going to put some upward pressure on long-term interest rates, and so people will be, to some extent, transferring from the bond market into equities. So I still think there's reason to be positive in U.S. equities. I do think in the long run, though, people need to look for overseas equities also, because I think there will be better long-term growth prospects overseas.
All right, David, thank you very much. Have a great weekend. Thanks, as always, for joining us. David Kelly with J.P. Morgan Funds. Well, the GDP report, along with weak data on factory activity in the Midwest and soggy consumer sentiment for May, weighed on stocks today, pushing the major indexes lower on this last trading day of May. The Dow Industrials dropped 115 points to 18,010. NASDAQ fell nearly 28 points, and the S&P 500 finished the session lower by 13. For the month, though, all three indexes were higher. The NASDAQ rose the most, as you see there, better than 2.5%. As for oil, crude prices jumped nearly 5% as the number of rigs used in oil fields declined for the 25th consecutive week. Greece was also a concern for investors today, and today, U.S. Treasury Secretary Jack Lew issued a stern warning to the debt-ridden country and its creditors: get a deal done. The comments were made as the Group of Seven conference wrapped up in Dresden, Germany. Our Steve Sedgwick has more.
Here in Dresden at the end of the G7 Finance Ministers and Central Bankers Conference, it was the unofficial agenda that was making all the headlines. I went to a press conference with Treasury Secretary Jack Lew, where he talked officially, of course, about the agenda and saying it was important to not rest on our laurels, that we had low growth globally, and it was important to do as much as possible to get that growth up, talking about the need for surplus countries such as Germany to spend more on investment and infrastructure. The unofficial agenda, though, front and foremost once again, and I spoke to Jack Lew about some of the issues and asked him whether it was the creditors of Greece or indeed Greece itself that had to move.
All parties need to move. There needs to be some flexibility on the part of the institutions. There needs to be some tough policy commitment implemented in Greece. One won't happen without the other. They have to happen at the same time. It can only happen when you go from the high level of generalities to the very specific levels of what actions you're prepared to take.
Of course, Jack Lew has been very worried coming into this conference that the fears of contagion have been underplayed. He was saying we would be in uncharted waters if indeed we did not get a deal and Greece was not to stay in the Eurozone. Steve Sedgwick for Nightly Business Report in Dresden.
Intel has reportedly resumed negotiations to buy the smaller chip maker Altera, and the two are closing in now on a $15 billion deal. According to reports, if the deal gets done, it would be the biggest acquisition ever for Intel and would be yet another tie-up in the fast consolidating chip industry. Yesterday, we reported that Avago had agreed to buy the semiconductor maker Broadcom for an even higher price, $37 billion. Shares of Altera, meanwhile, up 4% today. The Dow component Intel was up more than 1%. The health insurer Humana is reportedly exploring a sale of the company. As first reported by the Wall Street Journal, Humana has received takeover interest from Aetna and Cigna and is working with advisors now. Humana gets the bulk of its revenue from patients who use Medicare. Shares surged 20%, easily making Humana the best performer today in the S&P, and you can see where it jumped when that report came out. The report sent shares of other health insurers like WellCare Health, Cigna, Aetna, United Health higher in today's session on the prospects of consolidation. One of the most important cancer drug development conferences of the year is underway now in Chicago. Cutting-edge data will be presented, and the focus will be on some big-name companies and their work in the fight against cancer. Our Meg Terrell has more.
It's the biggest event in cancer research of the year. More than 30,000 doctors, researchers, investors, and analysts traveled to Chicago today for the annual American Society of Clinical Oncology meeting, or ASCO, to get a sense for the latest progress in the fight against cancer. A top focus will be medicines known as immunotherapies, being developed by Bristol Myers, Merck, AstraZeneca, Roche, and others.
When a cancer grows, the immune system is failing. So the immunotherapy treatments that we are developing today attempt to unblock, if you will, or activate the body's immune system to begin to fight off the cancer again.
Bristol Myers and Merck already have two of the newest immunotherapies, Opdivo and Keytruda, on the market. They're both approved for the skin cancer melanoma, and Opdivo is approved for lung cancer as well. Analysts are anticipating more data on how these drugs and others work for different cancers, as well as how they fare in combination with other medicines.
While Merck and Bristol Myers are the leaders with the two approved drugs, Roche and AstraZeneca have very similar drugs that are not far behind at all. I think what the debate within the sector really is right now is, A, how differentiated are these drugs? Is there any difference, or are they all essentially showing the same data?
Analysts are also watching for updates on drugs for breast cancer, including one already on the market from Pfizer called Ibrance, and an experimental drug called neratinib from Puma Biotechnology. Puma's stock sank earlier this month when initial data were released ahead of the conference, and analysts say the company will seek to change investors' minds about the drug's prospects at ASCO. Analysts are also closely watching a race in lung cancer between British drug giant AstraZeneca and smaller biotech Clovis Oncology.
We've seen multiple situations where there's two biotech companies or two pharma companies who are developing very similar targeted therapies. And an example of that is the biotech company Clovis, who has a very similar lung cancer drug in late-stage development to AstraZeneca. And part of the debate there is, are these drugs any different? Does one have an edge over the other?
Oncologist Stephen Sherwin said that while there's unlikely to be a single cure for cancer, progress is being made on multiple fronts.
I'm more optimistic than I ever have been that immunotherapies will help at least some patients rebalance their immune systems and maybe, if not eliminate the cancer and, quote, cure it, turn it into a harmless chronic condition that really doesn't affect longevity or the quality of life.
This weekend will give us the latest on where we stand. For Nightly Business Report, I'm Meg Terrell.
This afternoon, Bristol Myers released data on a drug Meg just mentioned, Opdivo, improved survival for patients with the most common form of lung cancer. But the drug's effectiveness was tied to whether the tumors had high levels of a specific protein. That could potentially limit the market for the treatment, and shares came under pressure, as you see on that graphic, dropping 6.5%. Still ahead, looking for some cheap stocks? Our market monitor tonight will take us bargain hunting. The U.S. moving one step closer to normalizing relations with Cuba today. The Obama administration removed the island nation from a list of state sponsors of terrorism. This was a key Cuban demand, as the change allows the country to conduct banking in the U.S., among other activities. Well, amid increasing pressure from corporate sponsors, FIFA, soccer's top governing body, engulfed in a massive scandal, went ahead with its elections, and it was not without drama. Wilfred Frost has more now from Zurich.
President Sepp Blatter of FIFA has been re-elected for an unprecedented fifth term in office as the head of soccer's governing body. In what has been a yo-yo afternoon, he failed to secure a two-thirds majority needed in the first round of a vote. Just as we're about to be heading for a second round vote, Prince Ali of Jordan decided the gap was too large to close, and he conceded defeat, leading to President Blatter's re-election.
I thank you that you accepted me, that for the next 4 years I will be in command of this boat called FIFA, and we will bring it back, where finally football can be played.
At the end of what has been a torrid week for the world of soccer, we hope this election result can lead to a new corruption-free era for soccer and for FIFA. For Nightly Business Report, I'm Wilfred Frost in Zurich.
Rosetta Stone pops on buyout interest, and that is where we begin tonight's market focus. The language products company evaluating an expression of interest that it received from the investment firm RDG Capital Fund Management. The company has been working to cut costs and simplify its business as its revenue has slipped in recent years. Shares jumped 18.5% on the news. They finished at $7.62. Weak guidance weighed on shares of Big Lots today. The discount retailer saw its profit rise as same-store sales increased. For the year, it lifted the lower end of its outlook, but the company issued soft guidance for the current quarter. Shares were 2.5% lower to $43.90. Genesco posted results that missed estimates. The footwear and hat retailer blamed port delays and gross margin pressure. The firm said its current quarter is off to a good start, but it cut its full-year earnings forecast nonetheless. Shares tumbled more than 2% to $66.19. Apple has bought a German augmented reality firm called Met.io. The company develops technology that combines real-world imagery and computer-generated elements to make moving video so consumers can do things like view the inside of a car before purchasing. The terms of the deal were not disclosed. Shares of Apple off today by $1.50 to $130.28. And Amazon is planning to expand its line of privately branded food and household products. This according to the Wall Street Journal. This would mirror the private label strategy other large retailers follow. Shares were a fraction higher at Amazon today. They finished at $429.23. Our market monitor tonight likes mid-cap stocks. He's got some names he says are cheap and that you should buy right now. So he says. He's Brian Peary, portfolio manager of the Hennessy Cornerstone Mid-Cap 30 Fund. Mr. Peary, welcome, first of all. Mid-Cap 30, do you keep only 30 shares in the company, in the fund at most of the time?
Yeah, what we do is, we try and get a diversification across all the different sectors to make sure that we're pretty well covered in that respect. But, we want a slightly concentrated portfolio so that the names that, work out in the portfolio have a more meaningful impact on our shareholders' performance.
Why does a smaller portfolio work for you as compared with some of the other funds that have hundreds of stocks in them?
I think that when we looked at it, we thought that there were some really exceptional names in that mid-cap space and that we would do better by keeping a concentrated portfolio. I mean, nobody really wants a portfolio manager's 585th best pick.
No, exactly. A very good point. General thought about the economy and the numbers we got today. Are you worried about the economy or not?
No, I think the economy is in pretty decent shape. I think the numbers that we saw today from the GDP were even better than we expected. We expected it to be a little bit worse than it even came in. The port closures on the West Coast and the weather on the East Coast, I think we're past all that, and it gets better going into the rest of the year.
Let's get on to some of your stock picks, beginning with JetBlue. Why do you like it?
I really like the airline sector in whole. I think that they've done exceptionally well. It's a bit of an oligopoly at this point. I think that JetBlue's perfectly positioned. They've got a great management team in place who's building these profitable and defensible networks, and they're really starting to kind of branch out to the upper level consumer by instituting their Mint strategy, which has been going exceptionally well. So, I mean, I think that there is a great airline and a great time. They had a pullback in the last week or so. Right now, it looks to me like a great entry point for the stock.
Let's talk a little bit about JCPenney. Why do you like it? It's been a troubled stock, but the new management seems to have things moving in a better direction.
I think that's the key element, Tyler. When you look at the company, they have had some concerns, and their strategy obviously didn't work out for a couple of years there. But I think the new management team in place has really kind of turned the ship around and are getting it going in the right direction. Whether it's teaming up with the likes of Disney and Sephora to put those stores in their stores and really doing a great job in bringing consumers back into JCPenney and really focusing on their core business, which is providing value to consumers in their fashion lines.
Let's go to your final choice, which is Pilgrim's Pride. A lot of people would be worried there that that company might be affected by this massive outbreak of bird flu. Should they be?
You know, so far, Pilgrim's Pride hasn't been affected by it, thankfully. I think that is really a great catalyst for why you actually want to own the stock at this point. You know, when you look back at say, okay, if you can get a discount in the market for some reason, in this case, avian flu, you know, the chickens pricing is going to stay high. I think the feed cost is going to stay relatively low. So I think that overall, you know, PPC actually looks like a great stock to own for the next 12 to 18 months.
All right, Brian, thanks very much. We appreciate it.
Thanks,
Brian.
Tyler. Have a great day.
You too. Great weekend to you. Brian Peary with the Hennessy Cornerstone Midcap 30 Fund. And coming up, an airline that's once again taking flight nearly 25 years after it went out of business. Yes, your eyes do not deceive. Here's what to watch next week. Data on manufacturing sentiment, an important economic indicator. Also, car sales, a read on consumer spending. And Friday, of course, Jobs Day. We will have the employment report from May. And that is what is on a very full agenda next week. Snapchat, the app that lets users send vanishing messages, isn't disappearing anytime soon. According to reports, the app is valued at $16 billion. The details come from a filing that indicate the company is in the process of raising $650 million in equity. Event spaces, co-working offices, they don't sound like things you typically see at a shopping mall, but they very well may help keep malls relevant amid the rise of online retail. Courtney Reagan has more from San Francisco.
The idea of the death of the mall gets a lot of attention, but the truth is, as retailers like Sears, Radio Shack, and Delia's close stores, many malls are morphing what fills the space. The smart malls are going after experiences online-only retailers like Amazon can't deliver: restaurants, salons, fitness, and more. Mall operator Westfield wants to lead the way by launching Bespoke on the 4th floor at its San Francisco Center Mall.
The 37,000 square foot space has a little bit of everything. It's the first ever co-working space in a U.S. mall. Plus, there's pop-up shops, demo and event space, all available for short-term rental.
It's a physical home for innovative companies, from startups to large brands, most of which have a focus on the intersection of retail and technology.
You can get seats or desks or offices or couches or bean bags, and you can get them for days, weeks, months. It's short-term in nature because it's innovative in nature. It's designed for fast throughput, high turnover, for innovation, for adaptation, and it's designed for companies to test the relevancy of their products. So by nature, it's designed to be quick and fast.
Shoppers can design custom shoes with Shoes of Prey or custom t-shirts at Bow and Drape. 5 designers with Fashion Incubator San Francisco will be here for a month. Even Angry Birds creator Rovio is debuting its new virtual reality game.
It'll definitely draw me back to the store. I think that like every time I stop by the mall, I'll come up here and see what new pop-up shops are here.
Westfield's co-CEO Steve Lowy doesn't believe every mall is dead, but he also thinks Darwin's theory is playing out in retail.
And those that can't adapt and haven't adapted are dying or will die. Malls like this that are located in unbelievable cities, great locations, have great retailers. Those malls are actually growing and growing really well.
While this mall is one of the more heavily trafficked malls in the U.S., a little traffic driving excitement can't hurt. For Nightly Business Report, I'm Courtney Reagan in San Francisco.
And finally tonight, something I thought I'd never see. Eastern Airlines is back. The once muscular brand, under new owners now, has started charter flights out of Miami. But can the new Eastern stay airborne this time? Phil LeBeau has more.
It looks like vintage Eastern Airlines, but this Boeing 737 is new and the start of a new life for Eastern.
You know, we like to say that Eastern is in the DNA of Miami, so it was logical and natural for us to put the airline back here in Miami.
Eastern flew its new plane over Miami in announcing its return late last year. For now, Eastern is a charter airline, making daily flights into Havana and eventually other cities in Cuba. Over the next couple of years, Weagle plans to have a fleet of 20 planes as Eastern branches out into commercial service throughout Florida and along the East Coast. But reestablishing Eastern won't be easy, especially with the biggest airlines adding capacity and making it tougher for niche carriers to break into key cities. Still, Weagle thinks he can attract flyers.
We think a combination of the fact that we've got newer airplanes, the next generation Boeing 737, plus a name on the side of the airplane that many of the passengers and the tour operators and others who charter our aircraft will recognize, and that gives them a level of comfort.
I'm Frank Borman, the president of Eastern.
It's been more than 30 years since Frank Borman piloted Eastern to new heights when the airline industry first deregulated. Those were heady days in the mid-70s. But by 1991, Eastern went out of business due to labor struggles and poor management decisions. It's a legacy leaders of the new Eastern vow not to repeat as it takes off in South Florida. Phil LeBeau, Nightly Business Report, Chicago.
And that is Nightly Business Report for tonight. For Sue Herrera, I'm Tyler Matheson. Thanks for watching. Have a great weekend, everybody. We hope to see you right here Monday night.